Welcome to my channel. I'm Doris and I'm here to share with you about my stock account and today's market update. Today my stock account has made a loss of $367. The Fed minutes said it will continue to raise interest rates. In my account today, including the post-market, I've lost 0.47% of my total net asset, which is 76,189 right now. Today, the total PL in my account is $25,050.57. Today, SQQQ decreased for 0.08%, and the RV rose for 2.71% to 46.92. The market closed mixed today. Dow Jones Industrial Average closed 0.26% lower. Nasdaq Composite closed 0.13% higher, and S&P 500 closed 0.16 lower. The oil and gas and discount stores made a loss of more than 1% today. On the other hand, most of the industries changed in between positive and negative 1%. The latest Fed minutes showed officials have decided to raise interest rates further, but almost everyone was in favor of a cut. Analysts said it suggests the Fed will raise interest rates by 25 basis points each time. On Wednesday, the Fed released the minutes of its January 31st to February 1st monetary policy meeting. At the meeting, Fed officials still thought further interest rates were needed to keep inflation back to the 2% target, although everyone almost favored a cut. The minutes show participants see a need to maintain a restrictive policy stance until future data confirm that inflation is sustainably sliding towards the 2% target, which is likely to take some time. The minutes noted that almost all officials agreed that a 25 basis point rate increase at the meeting was appropriate and that a few favored and might have supported a 50 basis point increase. According to the minutes, some officials said the less restrictive monetary policy stance could drag on recent progress in easing inflationary pressures. They said a readiness to raising rates further to 5.1% above the December forecast. Investors have raised their interest rates forecast ahead of the Wednesday's meeting minutes, with the latest forecast peaking at 5.33%. This shift in the sentiment has also helped tighten financial conditions, possibly helping the Fed to keep inflation at controlled levels while the labor market is tight. In the minutes of the Wednesday's meeting, Fed officials noted that the important point was that the overall financial conditions are consistent with the degree of policy constraints that the committee is implementing. Cleveland Fed President Loretta Mester said on Thursday that she saw convincing economic reasons for a 50 basis point rate hike at her February meeting, a view echoed by St. Louis Fed President James Bullard later in the day. Neither of them had a vote on monetary policy decisions this year. Recently released economic data shows that inflation level in the U.S. is still high. Under the expectation that the Fed may continue to tighten monetary policy, a number of foreign giants have expressed cautious views about the U.S. stock market. Morgan Stanley chief strategist warned investors that the U.S. stock market will fall about 26% in the first half of the year. Morgan Stanley has earlier warned that the stock risk premium for the S&P 500 was now in the death zone, because the index's risk returns have become unattractive relative to treasuries. The market continued to watch U.S. earnings. Digital security firm Palo Alto Networks announced an increase in its full-year earnings forecast. The virtual currency trading platform Coinbase revenue exceeded expectations. Stocks recorded their worst one-day performance since 2022 on Tuesday amid concerns that the Fed will continue to raise interest rates for the long term. In addition, Earnings report from the companies like Home Depot and Walmart comment on further future rating prospects have also raised concerns about consumers' health. Treasury yield surged Tuesday, also jet markets. On Tuesday, the 10-year Treasury yield climbed to its highest level since November. Trust co-chief investment officer Keith Lerner said, "I see a pricing correction on Tuesday based on expectations set. Fed will likely to be forced to maintain a high policy for longer, and given the sharp increase in the Treasury yields on that day. SYZ said the market is trading sideways as the investors expect more signals from the Fed. If the economic data continues to show strength, then the stock market could go down again." That's all I have for today. Thank you for listening. Thank you for listening. Don't forget to subscribe and like. See you next episode.